Hi, this is Randy Finney with the Right Side of the Chart, and this is a early session update for Wednesday, January 22nd, 2025. It is 11:10 a.m. Eastern Time, so I'm starting the video. And what we're going to do, I'm trying to shrink these charts down into view here, is just take a quick look at the equity markets. Best way to figure out where you're going sometimes is look at where you've been. So what I'm going to do here is just cover the indexes, the primary indexes, NASDAQ and the S&P 500. Going back, what I've done here is I keep folders of all my charts. I categorize them by year. So this is my 2025 charts. Going back to the recent lows here. So I'm just going to show you the charts. We're going to pull these up, look at the charts that were previously posted. I need to move that into view here. Okay, so this is the January 13th chart right here, where we're at on the 13th. That is the very day the market's bottomed so far this year. And been pressing the longs pretty hard, maintaining from that point a minimum target right here. I'm going to get to the charts. I always say quite often the charts are dynamic and therefore so is my analysis, but a minimum means just that I think a bare minimum going there with the possibility of more. Otherwise it would be either a max or sold target. So that was a low right there on January 13th, and we went on to, let's take a look at a few more of these charts. I'll try to look at the 5-minute chart I've showed you here and there, sometimes in the comment section for the bounces. Started to, at this point here, let's see, here's QQQ. I'll try to cover the Qs as well for a lot of you. Still maintaining a minimum target up to that downtrend line right there. And let's go over here to this point. There was some point here. Yeah, absolutely. Where we had just hit my target, which I'd highlighted before, the downtrend line right there. Perfect tag. Perfect gameable, tradable reaction off that initial tag. Another thrust up, which I actually believe that scenario. Let me find, I had one that even called for that scenario there. Yeah, that was it. On January 16th. So that was it. There was a low right there. On the 13th, we hit my minimum target right there to the button. Called for a pullback with another run up to the trend line right there. And then the chart that I had just skipped ahead to, which was this one here, is the, oh no, won't let me do that till I move the annotations off. That was the 16th, and right here, yeah, here we go. Let me pull this one into view. The next day, we had that exactly. There's that pullback with the thrust up for another test of the trend line. And again, I have to squeeze this into the view of the video here. Bear with me. There it is. And hopefully you can see that. You know what? I can zoom in. I just realized on these guys here. I think it can pan and so, oh yeah, there it is. Okay, so that was it. So we got the pullback as expected, another thrust up right to the trend line as drawn the previous day. And then I started to open up to the possibility, because remember we had a big divergent low. That was the reason to get bullish and long. Very much open to the breakout here. And I give you two potential targets right here, this reaction high and right here. So that brings us full circle, guys. This is the reason I'm doing this, isn't to, hey, look at this. You know, we did, you know, it's been, like I said, it's been just the very tradable market recently. And we did go on to break out of the downtrend lines on both SPY and QQQ. And I know a lot of the charts this month I was focused on the futures, again, for reasons I cited. You have better visibility, if you will, because of the round-the-clock trades. That means more candlesticks and more reaction points to develop trend lines. And there's a lot of traders out there that trade the futures, so they're going to, you know, breakouts will certainly matter. I'll get to the indexes in a second for you ETF traders. What I want to do first is go, okay, so this is the updates. There is the breakout. It occurred. You broke out both the downtrend line as well as the price resistance levels. And then these are the two targets I gave you. This reaction high here. Here, let me pull it in for you. In the videos, I sometimes forget that you might be watching on a phone or something. Those two reactions. So there we are. We are just a hair below that uppermost target. So again, minimum target was right here, which was hit with the initial pullback. Maximum target right there. still maintain. As I've said recently and this morning, you have some divergence now forming. This is a 2-hour candlestick chart. I gave it to you this earlier today on the 60-minute chart, my go-to swing trading time frame right there, and that's it. So those are the same targets. The number is about 22,100 on the NQs right there. You can see that's the negative divergence. And on ES, okay, also on the 17th, when we had the breakout, ES was just breaking out. Give you potential targets if the breakout sticks. Let me zoom in for you there so we can look at ES, see where it's gone, where it's at. So that was a low right there on the 13th. We gamed it up, minimum target trend line there. With I drew out this secondary trend. This is where I had ES going, that trend line as well. And that's the one that breakout did stick. So I had us going up here with a max target. The dotted arrows at the time just mean a lower degree of confidence. Solid arrows, just so you know, are always my high degree of confidence where I think things are likely going. Arrow breaks obviously are where you're likely to get a reaction upon the initial tag, and then dashed arrows would be uppermost or in that case target. So that's 6111 right on ES. Let's see where we're at now. If I can find my live chart, bear with me. I've got a lot of them down here. Somewhere down here I have ES. There we go. That's it. We're 6111. We're at 6124. According to my quick math, that's about 1/6 of 1%. Statistically insignificant. Effectively there. Well less than a fraction of 1% above that level. And again, as per this morning, we don't have any sell signals right now. We are at resistance. We are at those targets. But we do have is negative divergence on the 60-minute chart of the futures. I will note, not on the ETFs. I prefer to see it on the ETFs, just like we had back here on the divergent low. QQQ, SPY, as well as NQ and ES had the big divergent lows on the 60. Hence reason for going to a bullish near-term bias. We do have the divergence, and sometimes, quite often, that's all it takes to get it on the futures. But again, would be better. But remember, we're also coming off a very big divergent high on the daily, weekly, and even monthly charts of the primary indexes. So as per this morning's comment, what we're waiting pending sell signals on breaks of the uptrend line here. I said the minor uptrend line on ES. I'll get to SPY and QQQ in a second. We had this trend line I gave you the other day, which we did break. We broke and backtest, and look how well. That's that same line I had from here on the lows. There was the breakout, and all that was is a perfect backtest. Another thrust up, and that's given us this steep rising wedge. There's your divergence line. And so what you want to see, again, if you're a bull, buy pullbacks to support. Like you bought it here, buy it here. If you're looking for higher highs. If you are bearish and you're looking for objective short entries, as I said this morning, a solid break, especially a 60-minute close. Even better if you get a daily close, but the problem with a daily close, in some cases, you can have a big reversal, and by the time the end of the day, you've missed an objective entry. So that's just up to you. What I like to do in that case is take a starter position, add if and when each next support level goes. So those are your support levels. The wedge, number one. That 6111, which was the target, we're a hair above now. So if we fall back below it, it will mean that's a momentum, what I call a momentum-fueled overshoot. You had a lot of momentum or velocity heading up to that level, and so it's more than common to overshoot it briefly and come back down. And if so, it'll be a failed breakout as well, or a whipsaw. And then the failure back below the trend line. And then, of course, I gave you the arrow breaks this morning. Each of those are support levels. So that's what to look for the bearish case. So if we start to do that, I will give you then my thoughts if and as we approach that final near-term pullback target right there of about 59.17. And again, we need to clearly break down below this small wedge right here. So that's ES. Let me go back to NQ. NQ, let me just tweak that. No, we'll just leave it there. This is the trend line on NQ. I'll show you QQQ here in just a second. And there's our divergence line, gives us this 60-minute bearish rising wedge pattern. Again, just shy of my maximum bounce target with the S&P 500 futures currently at my max bounce target. So close enough there. And then the way it works in reverse, as if and as each support level is broken. Remember, resistance, these were targets on the way up, resistance levels. Resistance once broken then becomes support. So ideally you want to see a break of they should come together. If the trend line breaks, you should also get a move back below 21, about 21,900, and that would be a sell signal there. Minimum target right here. Again, I give you the targets this morning. You can check those out. Let's roll into the ETFs for ETF traders. Keep it very simple. There's the uptrend line on QQQ right here, comparable to the one I just showed you on NQ. And there's that comparable reaction high. Although there was a little bit higher, we're a little below that reaction high of that day in NQ. Why are we below it on NQ and above it on QQQ? Well, there's the reason I use the futures and the ETFs, because that most likely was a reaction that happened outside of regular trading hours between 9:30 a.m. and 4 o'clock p.m. Eastern time. So the futures tell us that's where NQ peaked, and we're a hair below it. So that's where QQQ traders might see a breakout right here, but futures traders see us coming up to resistance. And so that's what QQQ looks like. Again, would be nice to see the divergence on the 60-minute chart. If we make a new high anytime soon, an equal or marginal new high, you will have it. Okay, I'll just throw that in there right now. It'll simply extend. The big divergence has been building for a while, which also shows through very well on the daily chart. Here it is. Remember, this was a divergent high here recently. Any equal or marginal new high by a long shot will still very much be a divergent high. Why? Because the indicators are severely lagging here. So appears that upside's limited. This market for years now, even though it's been in an uptrend, has a history of punching through, making a marginal new high. Here's a previous high, there's a marginal new high, and then correcting. So it's almost as if back in the old days, a lot of securities would break out to new highs and they'd run. It seems QQQ quite often gets sold into, but there was a breakout right there that held. We back tested it and then went up and made a new high, but then had a bigger correction. Okay, so that's just kind of what it looks like now, what it would look like if we go up a little bit more. And again, that speaks to what's your trading style, time frame. Are you very short term? If so, keep stops tight on those resistance levels if we get the sell signals. Again, what I posted today were trade setups, not actionable trades. Need to get the breakdowns below the trend lines on SPY and QQQ and ES. So let me go show you SPY real quick. I just showed you QQQ trend line. There's a SPY trend line. It's very nice and clean, coming off that recent low, and that's it. So that's the catalyst there. And then you want to see, again, you have nice price and trend line support below. And so, for the bearish case, each breakdowns of those levels, then this one, would be check boxes. For the bullish case, bulls want to see if there is a breakdown, step in and buy. I can tell you that's an objective level. Again, this is two ways to do it. When you're bullish, you want to buy pullbacks to support. When you're bearish, you want to wait for a break of support and then short, or enter your short or add to your shorts. So those are the levels to watch. To do anything further would just be beating a dead horse, but I'll cover the small caps for you. For those interested, you have this primary downtrend line off the recent highs, current rejection. This was my uppermost trend line because it captured this reaction high right there, that one punch through, and that is the most significant trend line now. In fact, I can probably even take away this other one, or I'll just de-highlight it in color a little bit here. Just make it not as bright. So there it is. There's your trend line off the highs. I already gave you futures this morning. Talked about this recently. Again, that was the tag of the 200s, which I said likely to get a bounce, and no reason to short the small caps unless that goes out. But now we do have, as I gave you today, RTY. This is the small cap futures. There's the same trend line. This is the same chart I gave you this morning. And so far, so good. It was dual resistance. The only thing I like better than shorting a rally into resistance, if it's a rally I think will fail. If we're going up into resistance on something and the charts tell me, or my analysis says we'll probably break out and go long, I don't short there. I wait for a breakout and then I go long. In this case, it's a rally into resistance. It's not the highest probability trade, but I threw it out to you and yesterday as well, that's resistance. pretty good, both price resistance, as you can see, as I covered in yesterday's video, and downtrend line resistance. And to boot, you have negative divergence on the 60-minute chart, which also gives you this little bearish rising wedge pattern. I could probably alter that trend line and go like this right now, and I'll do it. I'm going to add that right now. An alternative, what I call a BOD, or benefit of the doubt trend line here. Let's zoom in nice and tight so you can see what I did there. That would be something like that. Comes in off the recent lows. Might have moved it a bit there. I need to fix it right here. Tighten it up. Okay, I'm trying to get the low there, and then this reaction low, that reaction low, and we're pretty much right on it. Yeah, we're right on that trend line. So that gives you, again, just like you have on the large caps right now, a 60-minute bearish rising wedge pattern. You have nice support right there as well. So there's your sell signal right there. It should take us down there to minimum. I mean, I could give you micro levels. I'd really hone down to the 5-minute chart. I think you get a little hiccup right there, but that would be your target. And then as I showed you earlier today, I have the arrows going down to about right here on both the small and large caps. These recent lows. Other than that, what I identified that day in real time before it happened, as it was happening, that would likely be what I called a bear trap, false breakdown on QQQ. So it said sticking with the longs there. And then we got it. And then once you recovered back above the support level, that means the bear trap was in play. And this is the short covering we got from the bear trap for those that shorted. And not just those that shorted. As I said that day, a false breakdown has two implications. Bears tend to short sellers short, and weak-handed longs get shaken out. Now, what does that mean? Weak-handed longs, it's exactly what it says. Longs that are kind of flighty, and then they clear out. And once they're purged, you have a stronger set of hands holding the security at that point in time. So if they didn't sell on that shakeout move, why in the hell are they going to sell as it's going up? So that's that kind of that logic. So either way, it played out, and I was only looking for a bounce trade, and that's what we got. And so all I can tell you definitively, I can't promise you we go here or anything else. I can promise you this is dual resistance and with negative divergence, and that's an objective shorting level. Especially, again, as I said this morning, you want to put the odds in your favor, wait for the large caps to break down, because if the large caps don't break down, and this is important too, remember, a bearish setup or a bullish setup is a untriggered pattern. If it's, in this case, a bearish rising wedge, it's a bearish setup, but it's not an actionable trade unless you get the sell signal, which is the break of support. Just like a bullish chart pattern, be it whatever it is, inverse head and shoulders, whatever you've got, it is a potential long setup pending a breakout or an objective entry. So that's it. So, we could keep riding up the trend lines and we could burn through the divergences. And then, guys, we're looking at most likely, very likely, almost certainly new highs in the indexes. Again, those new highs will be divergent highs on the daily and weekly chart, but divergence is not a sell signal. So then we'll wait for sell signals. Those can come on a failure on the breakout above the highs, a break of these same trend lines should we bounce on them here and move up. Remember, we've got Apple at the 200-day moving average. They're going to fight like hell there. And I went over that yesterday. You have a lot of the big tech stocks still above the 200. So at the very minimum, if we get these sell signals I threw out today on the indexes, and I'm covering now, it's not an aggressive moment to be aggressively short for a swing or trend trader. Active trader, you want to jump in, jump out, no problem. Keep your stops tight. But I want to see more of the Mag 7 stocks breaking down. I want to see Apple and at least a couple others take out their 200-day moving averages or key support levels and trend lines. And so that's it. Let's do this. There's not much else to add. I already covered the big market leading, top 10 or 8, whatever, Mag 7, 8, 10 stocks yesterday. I just gave you kind of very granular coverage of the indexes on the intraday charts, 60, 120-minute time frames. And again, where we were, the bounce we gained, and why I think that's run its course. Again, including but not limited to the fact this is where we're at those uppermost targets right now from a week or two ago. So we'll wrap it up here, see what happens, and I'll continue to hunt for other trade ideas. If you want updates on anything, Feel free to let me know. I got that update out to you on natural gas today. Showed you UNG for those of you that trade the ETNs in lieu of the futures. Here it is. And that's it. So we've got that, still looking at that T8. Remember, this is a kind of an in and out trade. I use different compartmentalize sometimes as a long-term swing trade, trend trade, but also the same trade can be for active traders, more of a short-term trade. And again, this one goes all the way back here. We've been buying nat gas at these divergent lows, multiple targets. This is when I first laid out that T8. It comes all the way back here. When we hit T5, I highlighted we had negative divergence, just like we did here and here. And so that sent us back down to where we started. So that was a, get out, short, recycle back in, go long. And that was the last entry. And again, that was a 60% hit the other day, almost to the button of T7, which hasn't been moved since back here. And there's T8, and that should roughly coincide. Again, best to align those targets on UNG with those on natural gas. I don't have that chart queued up, but I've covered it for many times, for months now. It's just shy of the $5 level, about $4.90 on NG natural gas futures. Pretty good resistance. So I'm still looking for that final thrust up. And although we had divergence, I think what we'll probably get, if we get it, is just one more, a little bit larger divergent high, and then might be time to reverse that trade if and when that target's hit. Okay, I'll wrap it up here and get it out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.